Yo, how's it going, guys? Beast Mode TV back with another video. I wanted to talk. Most traders use Bollinger Bands to chase breakouts. I use them to find safe zones in the range where I could sell options and get paid without stress. Let me show you how to use Bollinger Bands to time my cover calls and cash your puts better and more successfully. Here I have a little slide. How to use Bollinger Bands to find the best range to sell options. Identify the range. Use Bollinger Bands to define the high and the low of the range of the stock. And the upper band shows the overbought levels, and the lower band shows the oversold levels. Easy. Choose the option strike price. When the option is near the upper band, sell a covered call. Okay, so like how I showed you guys in the video, if it goes higher, we want to sell a cover call above. This is basically what we're doing, better entries. Now we're using an indicator to show us to how to identify better entries. Now, so like how we were in the video before, when we go up, when the stock goes up, you want to sell cover calls because you have a better entry to fill for your covered calls and gives you more gap. If it goes reconsolidates back to where it needs to go. So, like how we said, choose the option strike price when the stock is near the upper band. Sell a covered call slightly above it. When near the lower band, sell a cash secure put, and below it. Third, profit from time decay, just like how we do. Option sellers like myself, we love time decay. Theta decay is the best. That's how we get paid, guys. That's how we get paid. Focus on a 30 days to 45-day delta strike price with about 20 to 30% delta. Let time decay, theta, and volatility work in your favors while prices stay within range. Cool. Alrighty, guys. Let's look at it in the chart. Bang. All right, cool. All right. So you see this is the upper, this is the lower. Bollinger Bands are built around a 20-day simple moving averages. The upper and lower band represents two standard deviations away from that average. In simple terms, when the stock hits the upper band, it's statistically expensive. When it hits the lower band, it's statistically cheap. Most of the time, prices stay within those bands about 95% of the time. And here is the upper and lower part of the band. And part two, here, how do I use them to sell options? All right, this is how I use them to sell options. How I use to find the option range, I sell options outside the current Bollinger Band range where the probability favors me. If price is near the top of the band, I'll sell a cover call. So if it's on top of this, I'll sell a cover call. Most of the times, like here, like this is a time that if you had a cover call on this expiration date, if it was a Wednesday, then it would kind of not help you in this scenario. But if you see that for the most part in this stock, it stays within this band. And I mean, that's what you kind of want to do, guys. Like you just kind of want, this is so far and it stays within this band right here. So if you're selling puts, you kind of want to go underneath this green band right there. And then when you're doing cover calls, you're going to want to do it on, above, a little bit above these bands. And of course, if you want to get more premiums, you put it at a higher delta. So all right, so if price is near the top of the band, you want to sell cover call slightly above it, maybe one or two strikes, 30% delta, again, higher. If prices is near the bottom of the band, you want to sell a cash secure put slightly below it. And then right here, you basically want to sell a cash secure put. So if you have SoFi right now, you're gonna go to options, go to SoFi. I could have it pulled up for you guys, and then what this is. This is 25.98 right now. We're gonna go here. Let's get a 30%, 35 day out. And then we're gonna go here. We're gonna get 30% delta. So this $24 strike price. I mean, this $24 strike price is right around here. This would be where your put would be at. So that's literally what you do, guys, and that's how you get better fills. And I mean, by the way, this is not financial advice. This is just one friend talking to another friend, just trying to show you some cool tricks. So this is an indicator called Bollinger Band, and I'll give you more examples. This way I sell premiums where the price is less likely to touch, and that's how you get paid with a higher win rate. So this is literally how you get higher success in your selling of options, using indicators like that. Because at the end of the day, if you saw, we saw a 4 year, like we saw a couple of years. This is what 2024. I mean, we clearly see that we're like in this specific range between between the Bollinger Bands. Alrighty, guys, let's do. So setting up the trade, step 1, identify where the stock is trading relatively to the bands. Step 2, choose a strike that's outside the opposite band. Step 3, go for a 30 and 45% delta date to expiration, gives you time decay safely. And step 4, target that 20% to 30% delta on your options. And those are the sweet spots. And again, like how we showed right here, you're going to want to put, this is the lower of, this is where going down. This is it going down. Then you're going to want to sell a put at that price right there. And then the same thing for the upside. Let's say if you had let's see if I can find a stock that's up. That's going to be hard right now because, I don't think any stock is up, because the stock market is down today. Trying to see. But anyways, I would like to, that's the essence of what I wanted to show you, was that if it is up, that you put your strike price below it at specific, delta that we were talking about. And the same way for the upside. I did it only for the downside because the stock is down right now. You would have to wait for an uptrend for your stock that you're going to be selling options on to do that as well. And yeah, this gives me a wider buffer, and I'm collecting premium in a range where the stock would have to break its typical volatility pattern to hit me. And that's the essence of the Bollinger Band. In part 4, most traders sell too close to the money and they want fast gains, and I'd rather sell where probability and volatility gives me an edge. And it's time to, and it's not about being right, it's about playing the odds, and that's what Bollinger Band do. They give you visual odds. And I mean, I use this for trading all the time just to understand the range. It's really, really, like, you could do this now. So like you could turn this off, and if you've been looking at the stock for a really long time and you know your stock, you could really do it without looking at it. But it's a nice visual to understand where the range of your stock is going to be at. And yeah, that's Bollinger Bands. Yeah, that's Bollinger Bands. That's what I wanted to talk about today. Don't just sell options blindly, sell them when the market gives you room. And that's the essence of this video. Use Bollinger Bands to define your range, control risk, and collect premium like a pro. If you want more strategies like this, drop a comment, join the Discord, and we'll break down real setups every week. And I have it all in my Discord, guys. I sell options. I also post alerts on the trades that I take, as well as different strategies and stuff like that. Really keen. It's also free as well. You could join. Yeah, thank you guys for watching the video. Please subscribe and like. If you guys have any questions, please comment. All right, bye guys. See you later.